Let's bring in Stephen Kim, homebuilder analyst at Evercore ISI. Stephen, welcome. What do you mean by a benefit, by the way?
Well, I think the main thing here is market share. This is a tough year. Diana talked about things getting better. We certainly see that, but it's really a story this year of market share gain. Consumers right now want to buy homes that they can move into quickly. Now, you can't move into a home quickly unless the builder has already started building it a few months ago. That's called spec building. And regional banks, who really are the primary lender to private builders, they severely restrict that. They want a builder to actually pre-sell the home before they start building it and putting the bank's capital at risk. So therefore, the private builders cannot ramp up their spec building, and they can't get those homes to market that are already previously started. The public builders, no problem. They've got strong balance sheets, and that's exactly what they're doing. They're increasing their spec building. They have more quick move-in homes. They're going to gain market share.
I guess it's, two cheers, Stephen. I feel bad for the small players who are affected like that. What's the overall breakdown for the market in terms of the big versus kind of mom and pop players? Is it 50-50 or more lopsided than that?
No, it's more lopsided. This is a pretty fragmented business. When I look at all the public builders combined, they have about 30% market share. So private builders comprise 70% of the market as we think about it.
So say that one more time. Who's the 30 and who's the 70?
So the publics are 30.
Wow.
The privates are 70.
Wow. So you're telling me that the privates, who are 70% of the housing market, are negatively affected by the inability to access sort of bank credit to build on spec. That's a big blow for inventory. So if people who are listening are trying to buy a house, just be warned, it might be about to get even harder.
I think it is an important factor, and it's one I frankly think that the stocks haven't priced in yet. I think investors are still trying to get their heads around, in inflation, interest rates, and then a recession looming on the other hand. And what they're forgetting here is that the housing market can sort of stay kind of where it is in this sort of tepid area. But if the builders are gaining share, you're going to get growth, and the stocks should reflect that over the course of the year.
Arguably, have the stocks already reflected that? I was just looking at the charts. We're up 11% year to date on the XHB. We look like we're a little bit above where we were kind of, moving sideways last summer. What's that about? And what would it take for us to break out beyond that, do you think?
Well, Kelly, I think we have to put where they started this year in the proper perspective, because as you know, mortgage rates having basically doubled last year, the street saw this freight train coming and they got out of the way. And so these stocks were trading at incredibly low valuations. In fact, today, even with this move that you described, the small cap home builders are trading at more than a 10% discount to their current book values, which is an astoundingly low valuation. And those book values are about to be raised because they're all going to be reporting earnings here in the next 2 weeks. So these are valuations that started the year incredibly low. They are still incredibly low. And this is the opportunity that we think investors have to get in ahead of this market share story that we see developing this year.